On Monday, April 25th, the headlines declare that Elon Musk had acquired Twitter for $44 billion, which would lead one to believe that the deal is done. It is not. In this video, you are going to learn what happens if you own Twitter shares if the deal closes. Can you still buy and sell Twitter shares now that a deal to take the company private has been announced? Will the deal actually close, or could it fall apart? And this has been a popular question. The deal price is for $54.20 a share, and Twitter stock price is less than that right now. A lot of people think that buying Twitter shares now with the expectation that you're guaranteed to get $54.20 when the deal closes is easy money. But you might be surprised to learn that that may not be the case. This is round 3 in the Elon Musk Twitter saga. Hey everyone, my name is Preet, and this channel is for anyone who wants to learn more about the world of money around us. Twitter issued a press release on Monday, April 24th, indicating that the board of directors agreed to a deal in which Elon Musk would take the company private at a share price of $54.20, which values the company at roughly $44 billion. It's important to note that the poison pill was not triggered, and its implementation may have been successful in that it did what it was supposed to do: buy the board some time and get Musk back to the negotiating table. If you want to learn more about what a poison pill defense is, check out my video on that here. Now, $54.20 is an interesting price, not only because of the 420 meme and homage to weed culture, and not just because it represents a premium of 38% to the closing share price of Twitter right before the news broke about Musk buying up shares as a prelude to the takeover bid, but it also represents a 26% discount to the 52-week high of $73.34, which means that at least some shareholders will be locking in losses if the deal goes through. What happens next if everything goes according to plan? Now that the board of directors has accepted the deal, the next step will be putting the deal up for a vote with shareholders. While the board of directors has unanimously approved the deal, the shareholders are the owners of the company, and they may not be unanimously in support of the deal, but they only need a majority to get the deal approved. Now, some media outlets have suggested that following the vote, a tender offer will be given to shareholders. Now, I'm not a mergers and acquisition lawyer, but I don't think that seems to be the case. According to Rafi Melkonian, who is a lawyer and who has experience in M&A disputes, he notes that the deal is a merger and not a tender offer squeeze-out variety. Here's quickly how it would work. Elon Musk forms a new subsidiary corporation to act as the acquisition corporation. Elon puts money into this acquisition subsidiary. The acquisition subsidiary merges with Twitter. The cash inside is used to pay out the shareholders at $54.20 per share. The shareholders leave the chat. The acquisition subsidiary dissolves, and what is left is Musk owning Twitter. Now, this deal is also subject to review by regulators, and any antitrust concerns are actually quite low. These concerns tend to only be problematic when a merger or acquisition involves competing companies. Musk's other businesses are not social media companies, so there doesn't look to be any issues on that front. The SEC and Elon Musk, however, are not best buds. Musk has had numerous run-ins with the SEC, including incurring a $20 million fine for Tesla and a $20 million fine for Musk himself. Why? Well, a few years ago he tweeted that he could take Tesla private at $4.20 per share. The SEC alleged his statements lacked an adequate basis in fact and distorted the stock's price. Musk was also forced to step down as chairman of Tesla. Musk's views about the SEC are pretty clear.
I do not respect the SEC. I do not respect them.
Now, all that being said, the analysts' consensus seems to be that the SEC won't prevent the deal from going through. If the shareholder vote passes and the regulators have no objections, the deal could be scheduled to close within 3 to 6 months, according to the CEO of Twitter, which would be between July and October of this year. What happens if you own shares of Twitter right now? Well, if you own shares of Twitter right now and the deal goes through, eventually you'll get $54.20 cash for every share that you own. This will just show up one day in your brokerage account and your Twitter shares will disappear as they get delisted. It's important to note that there may be some tax implications for you here in the form of capital gains or losses, as it's the same treatment as selling a stock voluntarily. Can you still buy or sell Twitter shares? Yes, you can still buy and sell shares of Twitter because it's still a public company listed on stock exchanges. That being said, a lot of existing shareholders have sold shares after the announcement of the deal. Why? Well, the shares have increased from about $40 per share before any of the news came out to around $50 per share. That's a 25% gain. And if all goes according to plan from here, the future upside is limited to the $54.20 offer price. For some, they've decided to lock in these current certain gains or limited losses, depending on what price you bought in at. They may have decided that the risk and return from this point forward may not be worth it for them. Now, you're probably wondering, what risk? Well, if Twitter shares are trading at $49.46 at the time of this recording, then the possible return from here is 9.6% over possibly 6 months when the deal closes. If you're thinking that this is a great guaranteed return, it's not. It's not guaranteed is the whole point. It's possible that the deal could fall through. And if it did, it's possible that the share price goes down and you take a loss, and you could even take a significant loss. Generally speaking, if you see the price of Twitter falling now, it's a sign that the market believes the likelihood of the deal going through is getting lower. Vice versa, the closer the share price gets to $54.20, the higher the likelihood the market is placing on the deal closing. So let's talk about why this deal could still fall apart. The deal has a $1 billion break fee, which is pretty standard in a deal like this. Essentially, it means that if the deal doesn't go through, someone has to pay the other $1 billion in this case. So if Elon Musk decides that he no longer wants to buy Twitter and take it private, he would have to pony up $1 billion to get out of the deal. But for Musk, it's peanuts. And there may be a very, very strong reason for him to pull out. You may know Musk is the biggest shareholder of Tesla. Well, when the deal to acquire Twitter was announced, Tesla's value as a company dropped a massive $100 billion. Musk owned around 17% of Tesla at the start of the year, so he's lost about $17 billion on paper personally. And this drop in Tesla's stock price is generally attributed to the market being worried about Musk taking his attention away from Tesla to focus on Twitter. Additionally, it's just been revealed that Elon has been selling Tesla stock this week to the tune of $8.5 billion. And again, prior to any of the news, Tesla's stock was around $1,100 per share, but since he's needed to raise cash, he sold these shares at closer to $876 on average. That's a 20% discount to where they were before the news. While Elon has stated publicly he doesn't care about the economics of the deal with Twitter, those comments were made before Tesla's stock nosedived. One could argue that by eating the $1 billion break fee, he comes out ahead at this point, and by a lot. While he would pay $1 billion, the possible rebound in Tesla's share price could make up for that 20 times over. I don't know if he was thinking about those economics when he made his original comments. So, this deal is far from a done deal, and who knows, maybe a Bill Gates or a Jeff Bezos comes in with another offer of, $56.90 because memes. I honestly don't know what happens from here, but you have to consider that a real possibility is that the deal does not in fact happen. We shall see. Are you tired of thumbnails that make it look like creators are having their prostate checked in every video? If so, hit that like button and subscribe to my channel if you want more content like this, and I'll see you in the next video. Just a disclaimer, I'm not against you getting your prostate checked. If that's something that you need to do, you should definitely do that. See you in the next video.